Hello everyone, my name is Tony. I'm here on behalf of LH Crypto team. And I'm actually really excited to record this video today because we're actually officially launching the International Trading Marathon, which will be held by the LH Crypto, the first official crypto broker in the world. And will be held from the 15th of September all the way to the 15th of October. We'll post a few other notices and videos in regards to the conditions and how it will be held, etc., etc. We'll also have a few other videos, some sort of tutorials that will guide you through on how the trading actually works for all of you who are actually just getting into the process of doing it. Now, one of the amazing things about what we do, we actually give the ability to trade not only on the classical crypto instruments, so like say Bitcoin and Ethereum or other altcoins, but also we give an opportunity to trade with cryptocurrency, but to use any sort of instrument available on the market. So whether it's classical forex, so the currency pairs, whether it's other cryptocurrency, whether it's CFDs on commodities, or stocks and shares, or options, we do have all of this, and all of those instruments that are actually available on our platform. One of the amazing things also, we're actually adopting the MetaTrader 5 platform, which has actually been said to be one of the best, if not the best, professional softwares for trading online. Now, also a lot of banks use it, a lot of other companies, professional traders use it. It has already been said to be the most stable one, which also has a unique feature which not many companies can actually be proud of so far, is with MetaTrader 5, you basically don't have a problem with an order slipping through. So that means if you have, say, take profit at some certain level, you would absolutely close the position at this particular level. Now, enough with the advertisement, I guess. So today I would actually want to shed a bit of light on the whole process of margin trading. But just a quick reminder for any one of you who's interested in the margin trading, who's interested to participate in the International Trading Marathon, you're welcome to go on our website, which is lhcrypto.com. It's very easy. You just click a button, open an account, and you find all of the exciting things like winning a Lamborghini Huracan. You can read all about it online as well. Cool. So let's get into it. So first of all, in order to understand what marginal trading is, it's important to understand a few very important things. If we actually talk about the process of trading, we do realize that most of the times to trade on classical instruments, we would actually have to open an account in fiat. So that is USD or euros sometimes. Now, one of the exciting things with what we decided to do, what makes this project so exciting, is actually you're able to have your currency. As you can see, this is just a demo, but for the real one, you'll have a lot more. You're actually able to have your deposit in terms of cryptocurrency itself, where you would actually be able to trade on all of the classical instruments, stocks and shares, commodities, forex, anything, using your cryptocurrency as the deposit, which is very exciting news. Now, to get into it, one of the things to understand basically what margin trading is, let's have a look at the very first example with Euro USD. So basically what we do have is the base, which is Euro in this case, and the quote. So this is how currency pairs work. That's exactly how gold works, or commodities. It's normally, even if it just says gold, that's in terms of USD. So what our base is basically it's our good, or the merchandise, to make it a little easier to understand. And what our quote is, so the currency that we use, that's our money. So that's basically the currency that we say everything in terms of. Hopefully that makes sense. Now, one of the sort of funny things for all of you who are familiar with the cryptocurrency but have not yet discovered the world of finance in global terms, it's important to understand that a lot of things might seem weird to you at first, but let's have a look at what I'm talking about. So typically, when we talk about cryptocurrency, you'd be used to having one coin as sort of your basis, and then you can actually trade in terms of decimals of this one coin. Now, actually, it's a bit the reverse. It's actually upside down in that sense for all of you. Well, actually, which is the upside down? Okay. So in terms of the classical instruments, we do have something known as a trading lot or a standard lot. Sometimes they call it a bank lot. So basically what a lot is, it's a standard contract size. It as actually says on the screen just now. For Euro USD, it's actually not €1, not 100 euros. It's actually 100,000 euros. Exactly. So that is actually quite a bit of money. And I'm pretty sure most of you would agree that 100,000 of euro or whatever base currency we have here, it's actually quite a big amount of money, and sometimes it's not affordable for most of the traders, for most of the people who would actually want to earn on the market. Now, again, if we talk about say stocks and shares, it's actually 1,000 of that particular company's stocks. So you can't actually trade just one share. You can't say buy 2 or 500. It's 1,000 of them if you trade in CFDs. Now, again, if you talk about, say, gold, one of the commodities, it's 100 troy ounces. So again, you can have a look online if you're interested why it is so, but it's basically something that has been agreed upon ages ago in the market, and this is the standard terms. Okay, so basically we'll have a question: what do we do? Because in most of the cases, it's very, very expensive for someone to actually trade one standard lot. Most of us would not actually have 100,000 euros at hand. So this is basically where the main difference and the main advantage of using a broker actually comes in. So we do have something known as leverage. So it's basically one of the services that a broker provides, not only to sort of give this connection between the end user and the market, but also to make it available to the end user. So leverage, in simple terms, is basically the ratio of equity to debt, meaning that if we talk in terms of the classical one, say 1 to 100, then all we actually need for euro dollar is just 1,000 euros, which is affordable for most of us. Now, you actually have on your screens just now, you do have the formula, how you can actually calculate the margin. Now, what margin is, it's basically how much of the deposits amount the broker actually sort of freezes or keeps as a deposit for this particular transaction, if that makes sense. So basically, margin is what you do spend for this particular transaction, for this particular trade, given the leverage, given the lots they're using, and given the standard contract size. So let's have an example. So if we trade in, say, 2 lots, 1,000 euros each, then your margin with the leverage 1 to 100 would actually be 2,000 euros. I'm pretty sure it's straightforward. Now, that's actually one of the big difference, say, if we trade on famous BitMEX, which actually, I can say it's not that bad, because opposed to a lot of many other crypto exchanges, it does actually give you an ability to trade using leverage. Now, most of the other crypto exchanges, that would actually not give you an opportunity to do so. So if you only have, say, 1 Bitcoin, you can only trade with this one particular Bitcoin. And again, we'll have a look why it might be a problem or what might be the advantages a bit later. So BitMEX actually does give an opportunity for you to trade using leverage, but it's very, very limited. So on Bitcoin, it's the largest one that they give. It's 1 to 100, and all of the other cryptocurrency that are listed here, you get 1 to 20, sometimes 1 to 50. I think they actually limited everything to 1 to 20, and Bitcoin is the only 1 to 100 which is available. And again, BitMEX is a bit scandalous in that sense. Now, so something that I mentioned previously, if we talk about the profitability and the risks, it all comes from the leverage again. So basically, the higher the leverage that is used, the bigger the profit can be. Okay, but again, profit is, as it says, it's directly proportional to the risks. So basically, the exact same opposite can be said. The higher the leverage, the bigger the losses potentially could be. But again, this is one of the reasons why it's obviously good to have some sort of seminar, some sort of literature, and that's again one of the reasons why we do this sort of tutorials, to teach you guys how to actually behave yourself on the market, because it's not casino, it's not a gamble, it's something you actually have to know how to deal with. So one of the questions, how do we protect ourselves? It's not just about the knowledge and the confidence about every particular trade that you do, every particular transaction, but it's also, there are a few mechanisms. We will not be looking into those mechanisms in great detail today. We'll probably have a video a bit later on. Well, we might actually mention a few. But some of you might be very familiar with terms like take profit, stop loss, or pending orders. So it's some of the options that you do have in sort of hedging your risks once you actually opened a new transaction, once you have a new order. So one of the things also, it's important to understand, one of the key differences between crypto exchange and a crypto broker per se, it's actually the ability to trade both long and short positions. So on your screen just now, you guys would have the definitions, but basically a long position is when you buy something and you hold on to it, hoping that the price would actually go up, and then you sell it at a higher price. So basically you bought it at a lower price and then you sold it at a higher price. For many of you coming from sort of the real sector, or only having the experience of trading, say, cryptocurrency, you would be sometimes shocked with the whole idea of a short position, or the sell position, or bear position as they call it sometimes. So the idea is that first you sell it at a high price, and then you rebuy it at a lower price. So you can actually profit from this price drop. Now, one of the things to understand is most of the cases you would not be able to do such a thing with any crypto exchange. So with BitMEX, I'm actually not quite sure, but with most of the crypto exchanges, they would either not give you an ability to do that at all, or it would be very, very limited. And in most of the cases, even if you do have an ability to do that, you have to pay a premium for that. Now, basically what a crypto broker, and well, pretty much any broker, but our broker in particular does, basically gives you an advantage to short any position, even if you do not currently own it. So that's right. You guys can actually gain on the price drop by selling something which you pretty much only take for this particular trade. You sell it at a higher price, then you repurchase it at a lower price. Obviously, you gain your profit from that trade, and basically whatever you took in the first place, for this particular trade, you would actually give it back in that sense. So that's one of the important advantages of using, say, crypto broker, to just having something that deals in terms of only the assets that you do currently have. Again, it might be a big problem if you do hold on to an asset which is actually reducing in price with every single day, every single month. But you do believe it would actually go back up in price in some distant future. But instead of actually having to hold on to it, you can first gain on selling this particular asset. So you can gain on the price decrease, and then you can actually purchase it back and gain on the price increase again. So you can actually double the profit that you get from this trade. Okay, so let's have a look on some of the examples. And it's very important to understand. So this account that we do have here, this is actually what MetaTrader 5 looks like. One of the things to warn you straight away, guys, do not be afraid. I mean, it does look like there are a lot of different buttons to push, all sort of things. But again, these are the things that actually are here to help you. Okay, so most of the times you would actually not need all of those buttons. Some of them, they just settings for the interface. They're actually really easy to learn. But again, any sort of indicators, any sort of instruments, they're here just to help you to analyze it. Because as I mentioned in the beginning, this is not a gamble. Okay, so you do not gamble on something like this. This is actually to make sure that you do get your profits. And again, all of it, or most of it actually, comes from the psychology of it. And in most of the cases when people start losing money, all has to do with their psychology. So it's something that we would actually be talking about in the future, maybe in some of the other videos. But in short, it all comes down to our greed, to our laziness, and to our fears. That's the main enemies of any trader. Okay, cool. So, like I mentioned, if we do have a look on all of the instruments that we do have listed here, they're all very colorful. That's nice. So obviously, the Bitcoin, Dash, Ethereum, blah blah blah. We do have some of the instruments that you probably haven't seen before. So this is Bitcoin versus silver. Okay, so you're able to trade the price of Bitcoin against silver, against gold, etc., etc. Now, again, here you guys have classical currency pairs like Euro USD or British pounds and Swiss franc, Japanese yen, etc. But do bear in mind that our deposit, as you can see here, BTC, it is actually listed in terms of the Bitcoin. So it's not something that I mentioned in the beginning. You can actually go here and have your account open in terms of the Bitcoin or Ethereum or Dash or whatever you guys would like. Now this is exactly, wrong button. This is exactly what we're showing here. So obviously it does show in terms of 8.63 whatever Bitcoin, which was basically the standard demo account that I opened here, registered like 5 minutes before making this video, so you guys can do the exact same thing. Now let's have a look. So you do guys have all the classical instruments, currency pairs. You do have the commodities like cocoa and coffee and corn and wheat and etc. You do have some of the indices like S&P, Dow Jones Industrial. You do have well, most known stocks and shares like Apple, Google, and Facebook, BMW. And you do have a lot of other things like, where was it? So somewhere here, like Ethereum and US dollar and all other interesting things. Again, a lot of other currencies, and more companies and more commodities. There is a lot of it here. So bear in mind, this is just a demo account. So on the real account, we would actually have a few other things. Some of them, they're actually unique. We do have special deals with some of the exchanges. So in some parts of the world, we're actually the sole providers of this particular contract. Anyway, let's guys have a look on how it actually works. For example, we have Euro USD open here. So let's, for example, we're not going to go into the analysis at the moment, but let's have a look. For example, we want to buy something. Okay, we want to buy Euro USD. So it's literally as simple as clicking new order and we press buy by market. So as you can see, our order, or our transaction, whatever you prefer, all the information is actually listed down here. So as you can see, we do have, well, the symbol, our tickets. This is something that you can trace your trade with. The exact time of opening this particular trade, the type buy or sell, so whether it's a long or a short position. Volume, again, this is something that we mentioned. This is what we talked about in the beginning. This is the lots. Now, I'll quickly just change it into the amount, and you would see that it does specify here 100K. Okay, so it's 100,000 euros. Okay, so here's the price that this particular trade was opened at. These few things, we're gonna go into them just in a bit, which is stop loss and take profit. That's the current price, and this is the swap. Again, one of the important things, let's talk about swaps just for a quick second. Swap is basically, whenever you're using leverage, the cost of the debt that you do use over the night, typically with the brokers over the night, it's a very, very small fee. So, it can be as small as like $1 or like 60 cents, $3, $6, but it's not big. I mean, on this trade in particular, we can probably earn, say, like $100. And if we keep this trade overnight, we'd only pay like $3 additional dollars for keeping this trade over the night. However, in most of the cases, and BitMEX is one of the examples, whenever you're using the leverage, we'd actually have to pay the swap or the premium. It would actually be accounted for every 4, maybe 6 hours. So again, if you do intend to keep a longer trade, you would actually end up with having a lot larger swap over the time. And this is not to mention this, like I mentioned earlier, a bit scandalous history with the BitMEX. I'm pretty sure most of you guys have heard, but basically on the 22nd of August, yeah, here it is. 22nd of August, this basically what happened. So there was a relatively massive price increase with Bitcoin. However, BitMEX actually closed down for a quick sort of server repairs or whatever they did. But they basically stated online that there is some sort of technical problem they're working on. And they will be closed for any sort of trades for a short period of time. And basically what happened in that short period of time is that the price skyrocketed, but because their servers were down, and no one was actually able to do anything about it. Anyone who had short positions, they obviously missed their stop losses. So just for everyone to understand, stop loss is basically a function of a transaction which basically limits your losses to a certain level. So you basically close that particular transaction or this particular trade at this loss level. Now, obviously, if, say, they had something like a sell from here, and they were hoping to get maybe up to like this level, and their stop loss was maybe here. Again, because the stop loss actually was completely missed because the BitMEX was shut down, they, in most of the cases, actually lost either a lot of money compared to the account size, or they actually lost the whole account. So the whole deposit was actually gone. And it's very unfortunate, especially considering that it was basically a technical situation, not really to blame any of the traders who were working on BitMEX at that point. But also, it's a shame because it was actually tens of millions of dollars lost in this particular 1 hour. And then after that, basically what happened, once they opened up again, some of the traders that had pending orders to buy, say from here, when the markets actually, well, when the BitMEX actually opened, the pending orders, they actually activated around this area. So basically what happened is, instead of having their buy orders activated about this level, which would actually be profitable for them, less profitable than they probably imagined, but still profitable, they actually activated at the very, very top when the price actually started to reverse and go down. And again, this is a huge, huge problem. Let me just quickly remove that. Because again, all of those who could have gained on that particular big move actually lost because the price reversed in some time, and they lost on that as well. So in that particular case with BitMax, you know, they both buyers and sellers, they actually lost money, which is a shame. Anyway, that's actually one of the reasons that I mentioned in the beginning as well, is that MT5 platform, it basically does not allow for this particular problem. So there is no way of an order basically slipping through your hands. So if you do have a take profit or stop loss, it would actually close at that particular level. And a lot of different very respectful agencies, they actually said that this is the truth. This is the truth about the platform. They tested it in many different situations. Anyway, so yeah, Bitcoin. Let's I don't know. Let's, for example, sell it. So for you guys to understand how it works. So again, press new order, press sell. Oh, there we go. So this is done. Again, we can see the information about Bitcoin here. If you guys notice, the standard trading lot here is actually 10. So it's actually 10 Bitcoins. But because we use a leverage, again, it's actually a very, very small amount of money. So one of the tasks for you guys is to calculate using the formula that we have seen just now, just previously. For you guys to calculate how much is 10 lots of Bitcoin, given that the price is actually here. Okay, so again, let's have a look at, say, Bitcoin versus gold. Let's in this instance we can buy it. So notice one important thing: we're not talking about gold in terms of Bitcoin. In terms of US dollars. I actually have the reverse. It's the Bitcoin in terms of the gold. Okay, so that's why the price that you get here it might actually seem a little weird to some of you who trade on gold or have traded on Bitcoin previously. So let's, for example, buy it. I'm just completely really guessing here. I'm not really doing any analysis. Okay, so what do we have so far? We do have one of our trades which is actually making us a profit already. We do have one of the trades which is a little bit down from what we opened it, and another one a little more down. So let's just quickly change back to the lots. Also, one of the amazing things, you guys can actually, as profit, you can show it as the money in terms of the deposit, of your initial deposit. So it's very convenient for those of you who do understand what, say, 1 Bitcoin is, because you obviously own them. But also, if you guys want to change it to points, so that's basically how everything is measured on the market. It's not really measured in terms of dollars or say Satoshi of Bitcoin, or the decimals of something else. It's actually measured as points. You can change it to that. Now, we'll be talking about this later on at some point. Again, you guys can Google it. It's a very helpful term. Now, one of the things I mentioned previously, so talking about risks and profits. So obviously, I would not leave any of the trades like this of the night and just walk away hoping that I wake up and everything is absolutely fine. Of course not. So this is exactly why we have one of the options we can use is pending orders, which we'll not get into today. But the other option that we do have is using take profit and stop loss. So that's basically the two functions that allow us to limit our particular trade in some certain range that we'd like to. So one of the lazy things I would do is we can actually just drag and drop it. So say I want to buy here, it's 30 points. That's the stop loss that I would have, and the take profit would be, let's say about here. So 10.5 points. So again, this is very, very easy, but basically what you do, you drag and drop it, okay? And as you guys can see on the screen, I was just about to point with my finger. As you guys can actually see on the screen here, you can actually hover over it, and at any point you can see what your profit is. In terms of the Bitcoin, say, or in terms of the US dollars or whatever you have your account in, you can actually have a look here, okay? So basically what that means, if our trade goes all the way to this level, it would actually close our trade with this particular profit. And again, if it reverses just now, if it goes down, that's not a big problem. It would actually close this particular trade with this particular loss. Again, sometimes you would actually hear from a lot of traders actually that, you know, you shouldn't be using a stop loss if you don't want your deals to be closed, you know, occasionally. Now, you need to understand, this is something that you limit your risks, okay? Because in short, there's obviously a chance that you would actually reverse and go back, and, you know, in a few hours time when we're not looking, it would actually have a, you know, quite big minus on the screen. But again, this is why we use take profit and stop loss. So obviously if it goes up, you would want to fix it. Sometimes, you know, you would want to keep it open. It's up to you. But stop loss is something that I would recommend for everyone, especially if you're a beginner. You know, don't be afraid to have this, you know, minor losses that actually, you know, they get fixed because the deal is actually closed. Do not be afraid to have them. You know, that's a very good habit to actually have. And later on, you know, once you get more experience, then you would be able to see whether you actually need a stop loss or not. But you know, I would strongly recommend to use it initially, at least. Now, you know, same thing with Bitcoin, for example. You know, we can just drag it here. You know, we can just drag it here. Okay, that's pretty easy. Same thing with gold. Again, one of the things, if you want to be a little more precise, for those of you who have, say, studied by now what pips are, or for those of you who actually knew that before, another thing you can do, you can actually be very, very precise with what you do. This is, again, one of the benefits of using something like MT5, something that we do adopt. So what you do is you right-click, you go modify or delete, and then you can actually have the stop loss and take profits with the exact numbers that you would like. So, you know, say we'd like to have it, say stop loss about here, and take profit is about here. Okay, what we do, press OK, and here we go. Okay, so you guys can actually do it whatever way you would like. You know, you can later on drag and drop it. Again, this is if we talk about risks. Okay, so pretty much we covered the very basics of margin trading today. So you guys can actually see one of the deals. Well, actually, I traded a little bit previously. Yeah, we actually earned a little bit on this last trade. So as you can see, our euro dollar has actually closed off, and as you guys can see, if you have a look here, I'll actually zoom in for you. So this is basically what we had. So we had our long position open here, and then actually closed down all the way here, earning us about what, 10 points, which is actually very exciting. I mean, this is exactly how it's done. Obviously, just now we're sort of, you know, guessing, pretty much flipping the coin. But again, later on we'll actually have proper tutorials, and we'll be looking at different market situations, and we would actually get into the analysis itself. But again, one of the things, guys, it's actually almost time to finish this quick review, quick sort of startup tutorial. But one of the things to mention, first of all, I strongly recommend for all of you who's interested, you guys just go online. It's very easy. You just press open an account. You can register it. It takes like a couple of minutes. you guys actually have a full range of how you want to use it. You know, you can have it on your desktop version. You can actually it doesn't actually mention you can also install it on your Macs, for any of the Macs lovers. You guys can have it as a web terminal. Again, yes, you know, something like Bitmax, something like this, you guys can have it online. You guys can you know, have it on your mobile. Again, Androids, all of the OS lovers, you guys are welcome to use any way you like it. Now, again, you guys can have your demo account in whatever currency you would like. Yeah, it's up to you. It's very easy. So all of you who are interested, please go ahead, open an account, you know, participate. I mean, in the end, it's free. You guys get an amazing experience. Also, for any one of you who would like to participate in the International Trading Marathon, please stay up to date with the information. We'll be posting some more videos. We'll be posting some more information on the website. So have a look out for all sort of news like that. We'll talk about it a little bit later on. In about a week's time, we'll definitely have something out. And again, if you guys want to learn more about it, just open an account and go do some trades. You obviously don't have to, but it's something I strongly recommend. The more experience you guys get, the better you are. Okay, so let's wrap it up here. So for any of your questions, you guys feel free to go on social media. Feel free to get in touch with us, ask any questions you guys want. You can also join our Telegram groups. They're multilingual, so feel free. And thank you for your time today. Hopefully you learned something new, and see you guys later on. Have good trades.